Value investing with logarithmic charts. So first off, the obvious question is, what is the difference between a normal chart, which if you don't know is considered a linear based chart, and a logarithmic chart? So a logarithmic chart operates outside of the realm of price movement in value distance. Instead, it operates purely in percentages. This is incredibly useful to keep large moving charts in context, and of course the obvious candidate for this one jumps to mind with Bitcoin, with its multi-$1,000 moves and several in a handful of minutes. Those types of charts that are moving around all over the place, that using logarithmic charts really lets us kind of narrow in on where value is actually being achieved. Because sometimes when you've got a market, or even think penny stocks, where you've got a stock that's going from 30 cents to $6, the chart looks insane if you don't have it in a logarithmic sense. If you do, it brings it back into a little bit more of a, I guess, a level of normality. So there are a few things that you're going to need to make sure that you have set up for this, and one of the obvious ones is making sure that your charts are logarithmic. In NinjaTrader, it's fairly easy. Just double click on the price axis over here. So when you double click on the price axis, it'll open up your properties window, and then from there you can choose the type set to logarithmic, and then go down and hit OK, and you should be good there. The next thing that you're going to want to do is make sure that you adjust your measuring tool. The measuring tool, or the ruler, is the first one here, and you want to adjust that so that its default settings are in percent. And you can do that by choosing percent, then going into the templates and saving as the default, and that way it'll come up that way every time. And then from there, it's really straightforward. It's a little bit easier, initially at least, when you're getting used to this, to clean off the charts. Make sure they're nice and clean, blank, nothing else on them, just pure price action. So this is where you're going to quickly see the difference between a logarithmic and a linear style chart. So if I zoom way out, keep in mind this is an hourly, but if you look at the price scale, this has a low of 18,000 and a high of almost 50. So this is a massive distance that this thing is covered. Now, currently, this chart is in logarithmic, which means that it's all based on percentages. A 50% pullback measured here is the same as a 50% pullback measured over here. It's always going to be percentage based. But if I change this to a linear based chart, you'll notice a pretty obvious difference. If I measure from here to here, well, that's a 9.5% pullback. If I measure from here to here, that's a 9% pullback. If I measure from there to there, that's a 20% pullback. If I measure from there to there, that's a 28% pullback. What in the world, right? If I take a line, that's drastically different, right? That's a huge difference. That's where you're going to see the big change in logarithmic scaling and why it's so useful for this. Let me change this back so it makes a little more sense. There we go. So when we're looking at logarithmic, this allows us to measure where actual value is based on what we've seen historically. So there's a couple things that we need to kind of satisfy. First thing is making sure that we have our frame of reference. And our frame of reference is really just a matter of whatever your focus on the chart is. When I load a chart, if I like my chart to look like this is my frame of reference. What happened before this, what happened, or what is going to happen, it doesn't matter. This is all I see. This is all that matters to me. So what I want to look for are the two largest pullbacks, and you can go a little bit further than that. But typically there's going to be one big one and then one smaller one. In those two, you'll notice something very frequent. So if I measure from the top to the bottom, that is a 28.48% pullback. That's a big old pullback. But if I go over and I look at this pullback and I measure down there, well, wait a minute, 28.67%. 28 and 28. That's got to be a coincidence, right? Well, maybe. Let's go back a little further. What about this big pullback from there to there? 20%. Okay. So we're starting to see that the pullbacks that the market is actually responding to, buying into, is when it's dipping down to 20%. When it dips down sub 20%, that thing goes hauling out of there like someone lit a rocket ship underneath it. So any time that the market's pulling back about 20 to 30%, that's when I'm going to be paying a lot of attention. And the beautiful thing about logarithmic charts is they are all based on percentages. So if I measure here and I'm looking for a pullback, I can see what the normal size pullbacks are, and it will always be, in this case, 20 to 30%. Now those are just the largest ones, right? We need our frame of reference. So let's start with our pullbacks. The biggest one is going to be from the top to the bottom here. That is the obvious biggest move. But honestly, this whole thing really didn't start reversing until it broke higher here. So you could call this whole thing down one of the larger pullbacks. To me, it's a little bit too wide of a space. I like the relatively quick pullbacks. And in fact, with that mentality, I would rather measure from there to there. That's where the drop actually happened when the market found value on the dip. So that's what I want to be looking for as well. Now, if we're going beyond that and we measure the next smallest pullback, we've got this one right here, the initial dip. Again, I'm not looking for the secondary push. That was 11.2. This looks like a fairly decent one. That initial drive lower was 14.5. Okay. Let's see. We've got a nice drive down here. That's about 11.4. We've got a very nice pullback here. That was about 15.5. We've got that quick snap down. Not the second one, just the first one. That was about 7.5. All right, well, they're getting a little bit more aggressive. That first snap down was about 7%. The first pullback was about 5.5. So we can see the aggression is starting to step up. But we know where value is. We've seen the value demonstrated previously where when we're starting to get back about 15%, 16%, the market tends to respond. And if it's going to go below that, usually it's going to be digging into that 27 to 30%. So I can immediately gauge where value is when I look from the top. The highest point that it's been was up here, and I can measure down. And let's say that I want to look for right around that 27 to 30% mark, right? So the deep pullback where things get really interesting, we'll just put it at 27%, ends up being right about here, 36,200. That's where aggressive buyers in the long term are going to be picking things up. But again, in the short term, from our frame of reference, we do have another next smallest pullback. We've got this one right there, which is about 12%. That drive down, which is about 15. We've got the initial drive there, which is about 12. That drive down, which is about 14. So we're seeing an average pullback distance of, let's just say, about 14. And if we're looking from the highs, we can again figure out where that's going to be. Well, that was a pretty good guess. Let me bring it up just a little bit. That would give us a zone of interest on a pullback, which would hover at around 42,857. So if I wanted to be a buyer on the more aggressive sense, and I were looking for a value area, this doesn't necessarily mean, okay, now right there, bang, I'm going to place a limit order to buy. That's not what this means. But what that does mean is that if you notice that price is down in this area, that could potentially be a big area that you might want to pay attention to if you're looking for reversal patterns or maybe a continuation pattern back to the upside. This is where you're really starting to stack the odds or the probabilities in your favor. When you're utilizing these logarithmic charts, even on faster time frames, you can still really end up getting those odds more in your favor by making sure that you're entering in at the appropriate location. It's a great way to gauge your timing. All right, well, that's going to do it for this one. I hope you found it useful, interesting, entertaining, all that fun stuff. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Until the next time, we'll see y'all then. Thanks.